In this video, we're going to explore the fascinating world of European dividend stocks. What makes them so special? How you identify them? And most importantly, we're going to analyze some of the crown jewels. Companies with impeccable track records of dividend payments and growth. We'll look at their stock charts, discuss their current dividend yield, and explain how each one makes money. First, let's establish what it means to be a dividend queen. To me, a dividend queen is a company that has demonstrated exceptional financial strength and an unwavering commitment to its shareholders. This translates to a long and consistent history of dividend payments. We're talking decades, not just a few years. The longer the track record, the greater the confidence in its ability to continue doing so. Steady dividend growth. They not only pay dividends, but they also regularly increase their payouts. This is crucial for combating inflation and ensuring the purchasing power over dividends grows over time. Strong balance sheets and robust cash flow. A company can't pay and grow dividends if it doesn't have the financial resources to do so. We look for companies with manageable debt and consistent free cash flow. Resilient business models and competitive advantages. Dividend kings operate in generally stable sectors, and their business models give them a strong market position. Think of companies with economic moats, high barriers to entry, or well-known brands. But why do we focus on Europe? Europe offers a fascinating investment landscape. European companies are often more conservative in their financial management and tend to pay higher dividends than their American counterparts. Furthermore, geographic diversification is key in any investment portfolio. Including European companies can reduce your portfolio's overall risk and expose you to different market dynamics. Now, let's get to know some of these great companies. 1. Nestle. Nestle is a global food and beverage giant from Switzerland. With a portfolio of brands you probably know and consume daily. Nescafe, Kit Kat, Maggi, Purina. The list is endless. This product diversification and its presence in every corner of the world make it one of the most stable companies on the planet. Its products are in demand even in times of recession, giving it remarkable resilience. Nestle is a true heavyweight in dividend payments, having increased its dividend for decades. Its business model is based on continuous innovation, strategic brand acquisitions, and an efficient supply chain. Even with its enormous size, Nestle continues to find ways to grow and reward its shareholders. Nestle has been paying dividends for over 60 years, and currently, its dividend yield is around 3.5% to 3%, a figure you can see in the chart. 2. Unilever. From the United Kingdom. This is another consumer goods giant that touches the lives of billions of people. From personal care products like Dove and Axe to foods like Knorr and Lipton, its brands are ubiquitous. Like Nestle, the nature of its products, basic necessities, gives it great stability in revenue, which is ideal for dividends. Unilever has an enviable track record of dividend payments and has long been a reliable source of income for its investors. Despite economic challenges, its strong brand and global presence allow it to generate consistent cash flow. The company has also adapted to consumer trends, investing in sustainability and niche brands, ensuring its long-term relevance. Unilever has maintained dividend payments for over a century, which is insane. If you look at the chart, the current dividend yield is over 3%, as you can see on the screen. 3. Louis Vuitton. You might be surprised to see a luxury company on this list, but this is a notable exception. This French company is the global leader in luxury goods, with iconic brands such as Louis Vuitton, Dior, Tiffany & Company, Sephora, and Moët & Chandon. While luxury may seem sensitive to recessions, its brand power and the loyalty of its high-net-worth customers give it surprising resilience. Louis Vuitton not only offers a growing dividend, but has also demonstrated an incredible ability to grow its earnings and expand its empire through strategic acquisitions. Luxury goods have very high margins, which translates into robust profits and, therefore, substantial dividends. For those looking for a combination of growth and dividends, this is a very attractive option. The chart reveals that LVMH has been paying dividends for more than 20 consecutive years, with a current dividend yield that remains around 3% per year. 4. Sanofi. Sanofi is one of the world's leading pharmaceutical companies, with a wide range of products including prescription drugs, vaccines, and over-the-counter products. The pharmaceutical sector is inherently defensive, as demand for medicines and treatments is constant, regardless of the economic cycle. This makes it fertile ground for dividend investors. Sanofi has been a reliable dividend payer for over 25 years without interruption, with a track record of increases that demonstrates its commitment to shareholders. The company invests heavily in research and development to maintain its product pipeline and discover new treatments. This ensures future revenue streams and the ability to continue rewarding investors. Innovation is key in this sector, and Sanofi knows this. Below we see a dividend yield close to 4.5%. If you find this video helpful, please give it a like and subscribe to the channel so you don't miss our next content. 5. Allianz. It is a German company and one of the largest providers of insurance and asset management services in the world. Although the financial sector may be perceived as more volatile, Allianz has proven to be an extremely stable and well-managed company. Its diverse business lines, life insurance, non-life insurance, asset management, give it great strength and resilience in the face of market fluctuations. Allianz has an exceptional track record of dividend payments and is known for its progressive dividend policy, which means they aim to increase the dividend year after year. Its strong balance sheet, efficient capital management, and global presence make it a very attractive option for investors seeking reliable income. The chart shows that Allianz has rewarded its shareholders with dividends for over 50 years, also offering a current dividend yield close to 4.5%. 6. Siemens. This is a German technology conglomerate operating in areas such as industrial automation, digitalization, smart infrastructure, and mobility. While perhaps not as glamorous as consumer companies, it is a backbone of the global economy, providing essential technology for countless industries. Siemens has been a consistent and growing dividend payer for over 100 years, reflecting the strength of its business and its leading position in key markets. The company benefits from megatrends such as industrial digitalization and decarbonization, ensuring future growth. The diversification of its operations and its focus on innovation make it a very solid investment. As you can see in the chart, Siemens currently has a dividend yield in the range of 2.4%. 7. Total Energies. This French company is one of the global energy super majors involved in oil and gas production, as well as renewable energy. Although the energy sector can be cyclical, large companies have demonstrated remarkable resilience and a commitment to dividends, even during times of low oil prices. Total Energies is known for its attractive dividend policy and consistent payout history of over 40 years. The company is investing heavily in the energy transition, positioning it for the future and diversifying its revenue sources beyond fossil fuels. This allows it to maintain its dividend payments while adapting to a changing world. Note the chart, where Total Energies' current dividend yield stands at approximately 5% per year. 8. NovoNordisk. Headquartered in Denmark, this is a leading global pharmaceutical company with a dominant position in the treatment of diabetes and, more recently, obesity. Its innovative medicines, such as Ozempic and Wegovy, have generated explosive growth and made it one of the most valuable companies in Europe. Demand for its products is driven by the global increase in these chronic diseases, giving it enormous long-term potential. NovoNordisk has a very solid track record of dividend payments and growth, and has been paying dividends for over 25 consecutive years, reflecting its consistent earnings and strong cash flows. Its focus on research and development ensures a robust product portfolio and future revenue streams. Although it has experienced significant growth in its valuation, it remains a very attractive option for income investors looking for a company with clear competitive advantages and consistent expansion. The chart shows that NovoNordisk's current dividend is around 2.5% per year. Now that we've looked at some of the European stocks, it's crucial to talk about some important considerations before you jump into investing. Don't just look at the dividend yield. A very high yield can be a warning sign. It could indicate that the stock price has dropped sharply due to problems within the company, which could jeopardize the sustainability of the dividend. Always analyze the company's financial health. Dividend sustainability is key. A dividend is sustainable if the company can maintain and increase it with its earnings and cash flow. Review the payout ratio, the percentage of earnings allocated to dividends. A ratio that is too high can be unsustainable. Diversification. Even dividend queens can face challenges. Diversify your portfolio across different companies, sectors, and geographies. The information I'm providing you today is just a starting point. It's essential that you do your own thorough research before making any investment decisions. Remember, the key to success in long-term investing is patience, discipline, and diligent research. Don't get carried away by short-term market noise, and keep your focus on the quality of the companies you invest in. If you found the video helpful, please share it with your friends and family, and don't forget to leave your comments and questions below. I'd love to hear what other dividend companies you find interesting. See you in the next video.